Hello everyone, this is Sans. The question that everybody's asking is when are the Bitcoin mining stocks going to recover? In this video, I want to go over the BTC fundamentals and on-chain data. I will be talking about whether Bitcoin is going to be in an accumulation phase or if we are going to have a V-shaped recovery similar to the Corona dump. As always, I'm not a financial advisor and please do your own research. This is the monthly options data for Bitcoin. Today is May 28 and options are expiring. As we see here, in every month except for April, just after the options expiry, the price of BTC has gone up. It went up after 29 Jan over here, after 26th Feb, and then after 26th March over here. Guys, going ahead in June, let's use this data to make informed trading decisions. I have prepared this table about BTC volatility and what we can learn from the dot-com bubble and the big tech stocks. Guys, we are not in a Bitcoin bear market. We are just in a bearish trend within a wider bull market. In the future, there may be a new bear market, probably at the end of the year. All markets have cycles. I will come back to this in the later half of this video. And now let's go over data from Glassnode. Bitcoin made an all-time high of around 64,000 on April 15. There has been a lot of speculation that whales are selling to manipulate the price of Bitcoin. Guys, this is not speculation. This is reality, and it's backed up by data from Glassnode. As we see here, the orange line is the BTC balance of entities who are holding 100 to 1000 BTC. As the price of Bitcoin has decreased from 64K to 30K, the supply held by the institutions has decreased, as we see over here. And now they are accumulating Bitcoin in the 30K to 40K range. If we have a look at this article, ByteTree Asset Management from London feels that 35,000 was a reasonable level at which we could add BTC. They also mentioned that Bitcoin is not regulated and is a very young asset. Data from Chainalysis has also shown that professional investors have used this crash as an opportunity to buy at cheap levels, and this helps put a flow under the market. Guys, in the last few weeks, if you sold your Bitcoin in the low 30,000 range, then you've just got played by the institutions. BTC is now at around 36,700. We did try to break through 41K in this area, but we got rejected and we came down. On the downside, if we go to the support line of around 35,200 and then come back up, this time we may break through the resistance of 41,700 as we have the options expiry. Guys, we are now in phase B of the accumulation phase of the Wyckoff model. I have spoken about this in detail in my previous video on Riot blockchain. As BTC recovers, the share price of the mining stocks like Riot, Mara, and HIVE will also recover. We need to be patient during this phase. Guys, the 2021 Bitcoin cycle is different from the 2017 Bitcoin cycle. Now there are hedge funds, private funds, pension funds, and endowments in this space. The big money has entered the crypto markets and they are bringing their own strategies. This may lead to a difference in the price action of the 2021 Bitcoin cycle when compared to the 2017 or the 2013 cycle. Retail investors are investing in things like Dogecoin or Shiba, while the institutions with the big money are playing a different game. They consider Bitcoin to be a long-term asset. They consider it as digital gold and as an alternative to cash in an inflationary environment. Guys, the difference between gold and Bitcoin is that gold has a market cap of 12 trillion as of today, while Bitcoin has a market cap of 687 billion. The institutions feel that Bitcoin as an asset class is undervalued. They feel that Bitcoin is going to appreciate over the next decade. They are not looking for a quick 10 or 20%. They are investing billions of dollars over a long-term horizon. The institutions understand the value proposition of Bitcoin. They know that BTC has disruptive potential and it is a scarce asset. Guys, if we have a look at the dot-com bubble and the tech stocks in the 90s, for the big tech companies like Amazon and Apple, in those early days, these types of stocks had high volatility. As we know, after the dot-com bubble, over the years, these stocks have had huge gains. As more and more big money has entered these companies, the volatility has decreased. Over the next 10 or 20 years, as crypto continues to get bigger and gets more mainstream adoption, the volatility in the price of Bitcoin will also decrease. This is because more money will be needed to move the price of Bitcoin by even a little bit. Guys, eventually the market cap of Bitcoin can reach the market cap of gold or even go higher. Overall, during the BTC pullback over the last month or so, it has been a difficult time for shareholders of the mining stocks like Riot, Mara, and HIVE. We have to hold for the long term. Guys, BTC is in an accumulation phase now as per the Wyckoff model. We should not be worried with these short-term price fluctuations. Instead, we should be focusing on the network fundamentals, the hash rate, the wallet size, the number of transactions, and the transaction size. Guys, just wanted to ask something. It does take a lot of time and effort to make these videos, so if you would like to support the channel, please subscribe and hit the like button. Happy trading, and I will see you in the next video.